bad commodities, overvalued fiat currencies. People are going to stampede from those to strong monies. But of course, if you're one of 7 billion people and you don't have a brokerage account with a big bulge bracket Wall Street firm, you can't just buy the S&P 500 index and try to custody $10 million of the S&P index on an Android phone in Africa on Saturday, right? You can't custody it. And that means you can't trust your counterparties. So what we're going to see is a steady nonstop stream of monetary energy trickling from the weak monies and the weak assets to the strong assets. And Bitcoin just happens to be the strongest asset class in the world. Poorly understood, still not well understood, but it's a lot better understood when your bank freezes and they seize all your money and you're about to become bankrupt and or impoverished. Then it's easy to understand. It's harder to understand if you're a blue blood limousine, trust fund baby living in upper East Side, and you've got a portfolio of NASDAQ or S&P stocks, and then you think it's just an audit. Bitcoin is emerging as the winner, and people realize it's the low risk network. When all your banks fail, when all your other cryptos get shut down, if it turns out that your cryptocurrency is regulated, if your crypto security is regulated, if your crypto network is regulated, Bitcoin is going to be the last network operating. And so people are starting to renew their interest in Bitcoin. A lot of capital is migrating into the Bitcoin network. The combination of SegWit and Taproot laid the foundation for people to build more intricate and more interesting applications on the Bitcoin network. But for a number of years, the developer community was focused upon all the other cryptos, and that's because they could issue tokens in order to finance their development. And so it was a fast money, easy money shortcut, and they were being boosted by the FTXs of the world, because FTX had infinite money. Now I think people are starting to ask the question, what's the ethically sound, technically sound, economically sound path forward? Okay.
It's been a while since Michael Saylor came public and made so many interviews talking about his Bitcoin acquisition strategy and prediction. And there's a reason for that. His company MicroStrategy recently bought around 1,045 Bitcoins for approximately $29.3 million in cash at an average price of $28,000 per Bitcoin. As of April 2023, it still held about 140,000 Bitcoins, making it the leading public trading company owning this asset. Now people are asking Michael why his company keeps buying, his predictions for the future, how he sees Bitcoin's evolution into our current financial system, and how he reacts to the banking crisis and fiat debasement. In today's video, Michael will explain everything astoundingly and profoundly that only he can do. So pay close attention until the end. This interview will give you a clear vision of what's coming and how to position yourself to protect your wealth and profit from a 100x expected price growth. Before Michael explains why everyone should be buying more Bitcoin, here's his outlook on why other forms of money are dying.
I think what we see is an avalanche of banking failures internationally. The extreme examples in Africa and South America and Asia, where the banks literally sealed their doors, freeze your funds, and don't give them back to you. And I think we see an avalanche of currency failures all around the world. The extreme examples of Venezuela, Argentina, Nigeria, etc., Sri Lanka. But the lesser example is, even in the US, the world's most solid, strongest fiat currency in the world today reports what is it, like a 4.9% CPI number, in that range. And that means that the actual monetary inflation in the dollar is more than 5%. It's it's much more than that. The CPI is the lowest inflation number the government's not going to actually endorse, not the highest. Inflation in places like Argentina is 105%. Inflation everywhere in the world, in the world's strongest currency, the monetary inflation must be running 10%. In the weaker currencies, 20 to 30%. In the weakest currencies, 50 to 100%. So we have a crisis of confidence in currencies. We have a crisis of confidence in banks. And everywhere else in the world, if you want to actually access the strong currency, the dollar, you have to do it through a bank, but you can't trust the bank. And so there's a crisis of currency in the governments that control the banks, and a thought that maybe they're not all being run in a fair, equitable fashion for the people of the world. All of those things are losing support of the population. So if you lose confidence in the currency, the banks, then you lose confidence in fiat currency as money. And therefore the money is dying. It's obviously dying in Venezuela. It's obviously dying in Argentina. But it's dying everywhere in the world, even in the United States and in Western Europe. So when you lose confidence in the money, then you start thinking about commodity monies. If I can't trust the bank, if I can't move the money cross-border, and if the currency is losing value every year or every month, then I start thinking about commodity monies. And so the thing everybody's been talking about is, what are the commodity monies? Is it gold? Are we going to trade oil? Are we going to move timber, soybeans? Well, what are your choices? If you want to move $10 million in gold, that's 350 pounds. So when it comes time to actually trade $10 million of gold, it's going to cost you $250,000 in insurance and shipping fees to move 350 pounds of gold. If I wanted to move $10 million of oil, that's 125,000 barrels of oil. That's $400,000 to ship the oil from New York to London. Okay, that doesn't make any sense, not to mention the fact the average person doesn't have space for 125,000 barrels of oil. You want to move, property, $10 million of property is an apartment building. How do I move an apartment building from Africa to South America to North America? That's not happening at all, right? So what about a painting? Okay, well, a painting's pretty efficient, a $10 million painting. The problem is it's physical, it's fragile, it's non-fungible, which means that it might burn, it might get soaked, it might get lost, it might get stolen. But if it doesn't get any of those things and you want to trade it to the rich counterparty in London, you're paying anywhere from $500,000 to $2 million in auction fees just to trade $10 million of money in the form of a painting. Securities, you can't move $10 million of stocks across a border because they're trapped by the counterparty. Holding $10 million of an ETF at 50 to 100 basis points a year is going to cost you $500,000 to $1 million to store your money in securities. So now you see, well, what's $10 million of Bitcoin? 300 Bitcoin. So I can have 300 Bitcoin on a hardware wallet. I could, in theory, just remember it with a 12-word seed phrase. I can move it cross-border anywhere in the world. You can see all the other forms of commodity money. They're not fast. They're expensive to maintain. They're physical. They're fragile. They're non-fungible. The fees are exorbitant. So if the world's struggling for a solution to commodity money, Bitcoin is the king commodity. It's better than every other physical commodity because it's digital, which means I can carry it in the palm of my hand. Try carrying 125,000 barrels of oil in the palm of your hand. It's better than that. And it's also better than every other commodity because it's scarce. It's a scarcity. If the price of oil goes up by a factor of 10, if the price of gold goes up by a factor of 10, if the price of anything goes up by a factor of 10, people, the collective intelligence of 8 billion people will produce more of it. But Bitcoin is the one thing you can't produce more of. So Bitcoin's the apex money because it's scarcity and it's digital. And of course, it's the dominant crypto network in the world. It's the one that everybody trusts. It's the one that's truly decentralized. It's the one that's acknowledged as an asset without an issuer. So I think the meltdown of the banks and the meltdown of currencies is driving a stampede of smart money to Bitcoin.
Why should everyone buy and hold Bitcoin? Then
the reason I own Bitcoin is because it's either A, good for the world, it's an ethical imperative, or it's B, essential for the world, right? So it's ethical and it's an imperative. If you want to give freedom and property rights and hope to 8 billion people, you're not going to do it by day trading random stocks or investing in the corner delicatessen or trading options, right? If you're just a simple investor, that's not going to actually make the world a better place for 8 billion people. So Bitcoin is much more ethical than 100,000 other investment ideas. And I think the ability to give digital property or digital scarcity to 8 billion people on a mobile phone is sort of a once in the history of the human race development. It's a paradigm shift. And so the reason to invest in Bitcoin is the same reason you ought to support running water or electricity. Or if I said, would you like to teach everybody, on the continent how to master fire? Why should I do that? The answer is because life is cold, short, and brutal without fire. So it left out that part, which is actually the most important part. You ought to do it because it's the right thing to do if you happen to like humanity or believe in the future of the human race. Why would I keep buying Bitcoin? Because Bitcoin on average is going up 50% a year for the past 3 years, right? And the S&P is going up 6% or 8%. And the NASDAQ is going up 4%. And so what I'm doing is I'm basically acquiring a high growth digital monetary network, which is the dominant digital network. And it's like if you ran a stable cash cow company that was growing just a couple of percent a year, and you had the ability to raise capital and buy a company growing 50% a year that was the dominant monopoly in its space, that's a transformational financial transaction. Why wouldn't you do that?
And how does Michael see the future of Bitcoin? Can it be the solution for the small guy who wants to protect his family's wealth?
Bitcoin's market cap is about 500 billion right now. And the value of these financial instruments that I've talked about, all the other currencies, the securities, the properties, et cetera, it's 500 trillion or more. So Bitcoin is not 1%, it's 0.1%. So Bitcoin can increase by a factor of 10, and it's going to be a 1%er, and it can increase by a factor of 100, and by that time there'll be a lot more of the other stuff. And so when Bitcoin goes up by a factor of 100, it'll probably be a 3-4% of the entire financial universe. The bad money that's get crowded out, David, to be clear, bonds, that's why they're crashing. Silver, that's why it's down 9% in 3 years. Gold, the reason that gold isn't returning any yield, why it's up 1% in 36 months of rampant hyperinflation around the world, is gold is now the glass money or the shell beads money or the stone coin money. It's just the gold bugs haven't quite got it through their head that it's antiquated, shiny rocks. All these things that are underperforming Bitcoin, they're the bad money. In addition, look at the peso. And today the peso is like 480 pesos to the dollar. So in 20 years, the peso has lost 99.8% of its value in Argentina. But in the past 12 months, it's collapsed by a factor of 2. And just last week, the Argentine central bank closed the doors and they said, you can no longer convert your pesos into Bitcoin on an exchange, because they realized, according to Gresham's law, that people are going to be trading their pesos to Bitcoin as fast as they can. You see this going on with the Naira. You see that going on all through Africa. You'll see it going on everywhere in the world. What's going to happen is a stampede from weak monies, but there's so many of them, right? I mean, bad stocks, bad commodities, overvalued fiat currencies. People are going to stampede from those to strong monies. But of course, if you're one of 7 billion people and you don't have a brokerage account with a big bulge bracket Wall Street firm, you can't just buy the S&P 500 index. and try to custody $10 million of the S&P index on an Android phone in Africa on Saturday, right? You can't custody it, and that means you can't trust your counterparties. So what we're going to see is a steady, nonstop stream of monetary energy trickling from the weak monies and the weak assets to the strong assets. And Bitcoin just happens to be the strongest asset class in the world. Poorly understood, still not well understood, but it's a lot better understood when your bank freezes and they seize all your money and you're about to become bankrupt and or impoverished. Then it's easy to understand. People realize it's the low risk network. When all your banks fail, when all your other cryptos get shut down, if it turns out that your cryptocurrency is regulated, if your crypto security is regulated, if your crypto network is regulated, Bitcoin is going to be the last network operating. And so people are starting to renew their interest in Bitcoin. A lot of capital is migrating into the Bitcoin network. The combination of SegWit and Taproot laid the foundation for people to build more intricate and more interesting applications on the Bitcoin network. But for a number of years, the developer community was focused upon all the other cryptos, and that's because they could issue tokens in order to finance their development. And so it was a fast money, easy money shortcut, and they were being boosted by the FTXs of the world, because FTX had infinite money. Now I think people are starting to ask the question, what's the ethically sound, technically sound, economically sound path forward? Okay.
If governments are releasing their digital currencies, can Bitcoin still exist, or will it be replaced?
With the dollar, with the peso, with the bolivar, with the real, with the CNY, with the digital CNY, it's going to coexist with everything. Bitcoin is the strongest money that humanity has. Bitcoin's going to coexist with Apple stock and Google stock and Facebook stock and the S&P index and the ARK ETF and bond funds, right? And commercial real estate. All of these things are out there. I believe they're all weaker forms of property, right? And at the same time, as long as there is an Apple corporation, there will be Apple stock. As long as there is a United States of America, there will be the US dollar. As long as China exists, there'll be the CNY. So nation states will issue their currencies. The weak nation states that collapse may adopt the dollar or the euro or some other currency because their own currency collapsed. But in a world of nation states, we'll have fiat currencies. In a world of corporations, we'll have securities issued by the corporations. In a world of municipalities, we'll have debt issued by debtors. In a world where people live in houses and they work in buildings, we'll have real estate. Those asset classes won't go away, but Bitcoin will go from being 0.1% of that financial universe to being 1%, to being 2%, to being 10%. In a perfect world, David, Bitcoin would be like 50% of all financial assets, right? And it'll be a world where there's $2,000 trillion of stuff and Bitcoin is $1,000 trillion of the stuff. But look, there's still a legitimate reason to own Apple stock. There's still a legitimate reason to own a building. There's still a legitimate reason for you to have a currency. If the government says you have to pay your taxes in the currency, it's going to exist. So when we think about digital currencies, yeah, well, why would I want a digital currency? Because the government said I had to pay my taxes in it. Why wouldn't I want it? Because it might be the digital peso and it's losing half of its value every 6 months. So am I worried about the digital CNY or the digital USD or the digital whatever? No, I mean, they all have a reason, and there's going to be a competition for monies in the free market. Gresham's law is going to hold. And it's a benefit for Bitcoin to be different, right? Bitcoin looks like this volatile asset, and that's a benefit because if Bitcoin looked exactly like the dollar, it would be competitive to the dollar. You don't want to compete with the dollar. We don't want to be exactly like the CNY, because we don't need to. Bitcoin does not need to topple Facebook, Apple, Amazon, and Google to be successful. Bitcoin does not have to topple your commercial real estate portfolio or eat your house to be successful. And Bitcoin doesn't need for the collapse of all nation states to be successful. Bitcoin doesn't even need all the banks to fail to be successful. Bitcoin is simply going to be more successful as people either lose confidence in some of those things, or if you're a middle-class family and you've got $50,000 and you're trying to figure out, should we buy an apartment and Airbnb it, or should we buy some Bitcoin? When people realize it's hard to run an Airbnb business for the next 30 years, and they don't want to paint the apartment, or they don't want to deal with the water damage in the apartment, they're going to say, I guess Bitcoin looks like better property than an apartment that we're going to Airbnb. So as people realize that Bitcoin is just a better idea, it's going to demonetize those other assets in a gradual, progressive way. And David, that's the way you want it to happen.
Do you agree with Michael Saylor's outlook for Bitcoin? Or will we have another crypto or new asset that can replace it, being a safer, more profitable, and easy-to-use option? Let us know your thoughts in the comments below, and if you want to see more daily crypto curated content like this, please leave a like and subscribe. Thanks.